So hello, everyone. For those of you that don't know me or haven't been on one of these webinars before, I'm Emily from GoWP. Welcome to today's webinar on pricing, profits, and the financial principles of running an agency with Nev Harris, who you see here. Really quick, I just want to say a couple of words about GoWP for those of you who aren't familiar with us. So at GoWP, we are a team that loves to help agencies succeed and grow by providing exceptional white label WordPress services. Our team works under your brand to take care of your clients so that you're able to focus on the important stuff. So this means that agencies that partner with GoWP are able to focus on the low touch, high value work that helps them grow because they can depend on us at GoWP to take care of the high touch, low value work that disrupts your day. Things like plugin updates, secure backups, offsite backups, security scans, malware cleanup, and of course, like the endless content edits that are requested by clients that are always disrupting your work. So if you have any questions about partnering with GoWP and how we can help your agency, feel free to reach out to me at emily@gowp.com. You can check us out on our website, gowp.com. And also, if you're watching this and you're not in our niche agency owners Facebook group, you're watching this via Zoom maybe, I would love for you to go over to Facebook and join our group. So that, again, is the niche agency owners. It's a community of agency professionals who either already serve a niche market or would like to niche down. So we're broadcasting this webinar live in the group now. And it will also be available there to watch afterward. So go check it out and request to join. A few notes really quick regarding the webinar. I'm going to be watching the chat and everything. So if you have any questions for Nev, throw them out there as they come up, and we'll take a break kind of mid-webinar to answer some of the questions that come up during that first half. And then at the end, we'll have time for some Q&A as well. So let's get to why we are here today. Money. I'm so excited to have Nev Harris here with us today to shed some light on all that accountanese jargon that is hard to make sense of and really easy to stress us out. So Nev is an agency owner who teaches people how to understand their money and how to use it as a tool to grow their business. He's a graduate of the University of Pittsburgh and Duquesne University. Did I say that right, Nev?
Yes.
That's right, okay. And he's got a bachelor's in economics and an MBA in finance. So he is more than qualified to school us on all of this kind of stuff. So welcome, Nev.
Thank you. So we ready to dig in?
We're ready to dig in. The screen is yours if you're ready to share. Whatever you need.
All right. So understanding cash flow to make better decisions. That's what we're gonna be talking about. And I know people on the West Coast here, it's what 9:30, and you're probably thinking to yourself, why the hell did I sign up for a money talk at 9:30 in the morning? I haven't had nearly enough coffee for this, but we're gonna make this exciting. No fireworks or anything like that, but I promise you it won't be boring. All right. We're gonna cover two things. We're gonna teach you how to understand your cash flow, a system for that, and then I'm gonna tell you the 5-second fix for the biggest mistake I see agency owners make with their money. It's a super simple fix that could save you from a lot of hassle in the future. So this is the two main things we're going to cover. So let's get started. So to kick off, we are going to meet our cast. First, we have Jenny here. Now, Jenny, she is a rock star coder. She has some great projects she's working on, some fantastic projects that she's really happy about. But she's about to go to bed, okay? And she's laying down in bed, and then it all of a sudden hits her. It's like it's the 5th of the month, and on the 10th, she has to pay some contractors. And then the day after that, she has her big chunk of change to go out to Gravity Forms to renew her subscription there. And then she has all her little bills coming in for like rent and stuff like that too. And she doesn't have any recurring revenue coming in. She doesn't think till like the 15th or something like that. And so now she starts to stress and she can't fall asleep because she's worried about things. But she has a great business with a lot of money coming in, but she just doesn't know if she's going to have the money in the bank at that point. So this stress keeps her up at night. It keeps her, saps her energy and everything like that. Not fun. So we'll move on to Jimmy here. So meet Jimmy. Jimmy is sitting in his favorite coffee shop. And if there's any of my Australian people on here, he's sipping on a long black and doing his thing, when all of a sudden, like, everybody from the coffee shop starts staring at Jimmy. And Jimmy's like, what the hell? You know, do I have something on my lip or something like that? And what it is his MacBook is making this crazy noise. It's on the struggle bus, and it's having a problem with, you know, processing the stuff he's asking it to do, you know. And so he thinks to himself, man, I really need to get a new MacBook, you know, because it's not keeping up with my tasks. And he's thinking, oh, there's a new MacBook 16-inch one with that just came out. You know, I need the discrete graphics card, and I need the upgraded RAM, because Apple gives you like very little RAM for such a high-end device. And then they want like $500 to replace $60 worth of RAM. So that's Apple. And he starts thinking to himself, do I have the money to pay for this? I need it for my business, but if I buy it now, in a couple weeks, a month, am I not going to be able to pay my bills? Am I going to short something? So Jimmy starts thinking, boy, maybe I should buy the 13-inch MacBook Pro, or maybe even a MacBook Air, but that's really not going to keep up, really not going to solve my problem. But he's worried to spend the money. He doesn't know when to spend the money. I think as an agency owner myself, I've had these decisions. I've been Jimmy, I've been Jenny. You know, I don't know when to buy new equipment, software, when to hire people, because you know, am I going to have the money to do it? Is this going to further stress me out? So these are the kind of things that we're going to implement a system that's going to, you know, answer these questions and help us make better decisions along the way once we understand our money. All right. So let's get into it now. But first, you know, the obligatory slide about who I am. And this is where I say all sorts of great things about me that you then decide to check your phone until I stop going on about myself, because this is the only thing you really care about. Who the hell am I, and why should I listen to you? So, and that answer is really simple, because my name was on the email you received when you signed up for this. All right, next slide. No, kidding. Emily did a good job introducing me. I'm not going to go into that again, but I do own an agency, and but I got into it as a different route, because you can see my education and background is not in WordPress or design. Actually, I'm not really good at WordPress, and I have the artistic talent of a gnat. So, but I had a marketing background, and I had a designer, and I had clients that for one of our other businesses that wanted websites. So we decided to start building websites. All right. And with the websites we were building, we had a whole bunch of problems, because it's not that simple to build a website. All right. And so we got a lot of help from the WP community and whatnot. And I was in a mastermind group, and I got a lot of help from those people too. And so I in turn helped them with their finances. And, you know, and what I discovered is they really didn't understand their numbers. Really successful businesses really struggled with this kind of stuff. They didn't understand it. They didn't think they had a real business. They were worried about their business because of they didn't really know how to look at their numbers and everything like that. And when I sat down and looked at them and helped them and explained them some simple things, they were like, wow, it was like mind blowing for them. So I decided to go out and, you know, teach people this kind of stuff. So that's that. So let's get into it. All right. So here's our business expense tracker. All right. So you're going to get all these templates. We're going to give it to you all for free. This is a course that we do. It's a paid course. It's something we sell that you guys are all going to get for free. So you'll get, these will all be in templates. You'll get and the course is probably twice as long and goes much more in depth than what we're teaching. You guys are all going to get this for free. So, so what you do in the first column, you list your bills. All right. In the second column, you put your monthly subscriptions. And in the second column, miscellaneous stuff that, you know, only comes up every once in a while, something like parking or something like that, you know, those kind of things. And so we take this stuff and we list out the date it's due, and we list out how much it is. Pretty simple. This is like the foundational stuff that's going to build on this stuff. And then at the end of it, the whole sheet, you know, tell you how much you need. So this example, $15,394 Jenny needs to, you know, pay her meter bills every month. So, and then you could do some cool stuff with that we get into in the class we won't get into here. Like you could figure out what kind of profit you should be making on that and all sorts of stuff. So to see if you're actually, how your business is going. But moving on. So this is what we call our simplified cash flow statement, because I just feel money is talked about in these complex languages that they haven't evolved in 100 years. They're for accountants and financial planners and these type of people, and it's just not made for like us. And I'm getting a package. I like packages. So where was I at? Oh yeah. So here's what we do. We take the we take the stuff that we wrote in here, and then we just start putting it in here. So rent was due on the 1st. We put it first, and we do then we put rent for what it is, and then in the green column is money that we have coming in, and the red column is money we're paying out. Okay, so and then the balance is the yellow stuff. You'll see I'm big on numbers and everything like that, because even though I have an MBA and all this kind of stuff, I hate spreadsheets. I'm sure there's many of you out there listening to this that like spreadsheets a lot more than I do. So I got out of grad school, and I realized my job was going to be sitting in an office for 10 hours a day staring at spreadsheets. That wasn't going to be what I wanted to do with my life. So, ergo I own an agency now. But anyways, so I'm going to make stuff very visual and very easy to use at a glance. All right. So, so we do this with all our numbers, and this is what it looks like. So what you have here is you have, your recurring revenue coming in, and it's green. You have your rent, your payroll, your contractors, G Suite, all this stuff right here, and to look at. And then you have the balance here. What you'll see is some of this is green and some of this is yellow. Now there's a reason for that, because green, and we'll get to what these colors really mean, but we like green. Yellow is like we have a threshold set of $1,000. So if our balance ever gets below $1,000, it turns yellow. So at a glance, we could see. And here's the thing with that threshold. In the class you're going to get, it's just conditional formatting in Google. So we teach you how to do that. It's pretty much a right click. It's really simple to change. So, and then you can set it for whatever you want. If you're a bigger agency and you don't write checks for less than $5,000, you want to set that for a little over 5,000. I think 1,000 is safe for most people, but if you're only writing a bunch of small checks, you're just starting out, maybe you want to put that at like 500. So whatever you think, okay, if I get below this amount of money, it could be an issue. That's where you want to set the threshold. All right. Now let's look at the next slide. So the next slide here is the same slide before, but let's bring in this slide right here. And as you could see, the only difference in this slide is that column turned red because I changed contractors from $630 to $6,300, and we only had 1,070 in the account then, so it went red. Now red is bad. Red is saying, hey, look, you don't have the money for this. So we have these different colors for this reason, to let us know where we stand with stuff. So let's go over what these colors mean. We have red, yellow, and green. And I bet nobody could guess where I got those colors from, right? So, and then from 0 to 30, we have, so if it's red, within 0 to 30 days, so we set these things up over 90 days. We have these, we're tracking this over 90 days. And if between 0 to 30 days, if you see a number that's red, and then that column, anything's red, you need to find money. You need to either make some sales, bill some clients, chase down some money somehow, because you're heading for a problem. Now, knowing you're heading for a problem does not necessarily reduce your stress, but like waking up, but what it does is it reduces the unknown kind of stuff, because you always know what's going to come up and you can know how to prepare for it. And if we prepare for things that are going to be bad coming up, it actually does reduce our stress. And most of the time, things are going to be good. And so if we're worried about the unknown, it just stresses us out for no reason. And this tells you, okay, something needs to be fixed. So when it's red, we want to find money. When it's yellow, it's just don't spend money. So if Jimmy's yellow at all between 0 to 30, Jimmy does not want to buy that laptop, because it's not a good point. So green means everything's going great. All right. So 31 to 60 days, what do the colors mean? Red means don't spend. Means you probably, you want to think about it depending if it's 30 days, 32 days, or 59 days. You want to see where it is. And you might say, I know I'm going to get some new business in, I have some deals in the pipeline, some should close. So you might not want to worry about it, but you definitely don't want to spend any more money if you're going to be red in the next 30 days. If you're yellow, just caution, maybe don't spend, maybe not. See how many days you're in that yellow. So, and if it's only a 1 day, 2 days, and you're going to get money in, just don't spend money till after those days. Okay. If you're green 60 days out, you're doing really good. You should be really proud of your business because you got your cash flow clicking. And then we move on to 60 to 90, 61 plus days. So, now this is, if it's red, just caution. So if it's yellow, no worries. If you're green 61 days out, you're absolutely crushing it. Okay. You're doing really good with your cash flow. Because here's the thing about this. If you do this, you're going to come up with a very conservative estimate for 2 reasons. Because one, like our expenses are much easier to know because we've signed up for these things. We know what we're going to spend money on a lot of times. What we don't know is how many sales are going to come in and when they're going to come in. Okay. So 61 days out, if you're worried about red at 80 days, you kind of maybe have more of a lead generation problem than a cash flow problem. But knowing your cash flow tells you like, wait, maybe I need to start thinking more lead generation. Maybe I need to come up with more of a predictable selling system so that I, don't have to worry about this kind of stuff. But red is just not that big of a deal then. Red's a huge deal, 0 to 30. And it's something to be concerned about and pay attention to in the second month. So that's how that's how the color system works. And like I said, colors, visual, easy, get actionable data within 10 seconds of looking at it. So now we're going to move on to the Nev Harris system because I want to give you guys a way to keep it in green a lot more because that's what we want to see. Green makes us happy. Green makes us relaxed. Green makes us profitable. So what we want to do here, this is the same setup as the one you looked at before where you had Siri obviously thought I said something to her, that it's the same setup that we had something before, but that we went green into yellow. This time we don't, this time it's all green. And not only it's all green, by 10/16, we have 10,000 in the account. And instead of, going red, we went yellow here. So, and here's how we do it. There's two main tenets of the Nev Harris cash flow system. So one, it's setting up more preferable dates with your vendors. Okay. So if your rent is, you got recurring revenue coming in on the first, but if your rent's due the first, you're paying your contractors on the first, you're paying your payroll on the first and everything like that, move that out. Tell your landlord that, that you're going to pay him on the 5th. Most landlords won't have a problem with that. If you start paying him on the 5th anyways, he's not really going to complain that much. So if at all, if he gets his check reliably. Contractors and your payroll, just tell your people you're paying them on the 5th. At my agency, we pay everybody on the 20th because that just works. We got a lot of money coming in the middle of the month. So we pay everybody on the 20th once a month. It just works for the way our money comes into our business and makes things more simple. So, and then you say, okay, Nev, but if I have this recurring revenue coming in, why don't I just do it on the 1st? Because another one of the key roles to the Nev Harris cash flow system here is, and Nev Harris in general, is flexibility and wiggle room. I love me some wiggle room, some flexibility. It really helps you out with stuff. So, because tell me you haven't been in this situation. You run all your credit cards and all of a sudden one doesn't go through. What the hell? You're thinking to yourself, why didn't that go through? And you know what? It's an expired expiration date. Who hasn't that happened to? That happens to us several times a year. So you have to get a hold of the client and you have to say, oh, and he says, oh yeah, that's right. My expiration date is expired. Oh yeah, I got hacked, or I went to Vegas, or something happened and I just changed my credit card. I canceled. We had a client that used to go to Vegas every like almost 6 weeks and would cancel his credit card every time he got home. And so we'd have to get a new credit card from him. It was a nightmare. But so we want to give us that wiggle room in case we have to do something to get that recurring revenue in. So we got 4 days in there to make things work. All right. And then the other big key fact is that we use a credit card. Now you might be saying, whoa, Nev, credit cards. So no, we like credit cards, they could be terrible, but they could be good if you use them in a responsible way. And we're not using it to finance anything. What we're using it to is to create some room with cash flow. So what we want to do and why we were able to do this with, other than reorganizing the dates, why we're able to keep this all green is because we take all these little, oh crap. So you click on the screen, you will change it. So so you're taking your water bill, your G Suite bill, your Zoom bill, your QuickBooks, your phone, your Creative Suite, all these bills, all these little bills throughout the month that you're paying throughout the month that are taking money out of your account out the month. You put them on a credit card, and then you could pick the date you want to pay it, and you pick the day that's more that's better for you. So, for example, in this situation, we have all those little things that were coming throughout the whole month. And we have them, and we're paying them on the 22nd. So we're lumping them all together on a credit card, and then we're paying off the credit card on the 22nd. So now that keeps us from going in the yellow. All right. So, and then the other thing with a credit card, what you do is, so you have everything lined up there in the credit card column. If you go out to lunch and you use your credit card for lunch, all right. So you come back and you enter it in there. You say, okay, I went out to lunch. It cost $42, took a client or, your staff out, whatever, or you just balled out on a big lunch, whatever you do it how you do it. And then you come back and you put it in there. And so every time you spend money on a credit card that day, you enter it in there. Okay. And there's a couple reasons for this that we'll get to. So now let's get to this. So we're going to, this actually slides out of order. Should I have my bookkeeper or a VA do this? The answer to this is no. You should not have your VA or bookkeeper do this. It sounds like perfect work. It's that low quality work that Emily was talking about. It's what GoWP is perfect for take care of. It's like that kind of stuff. It's like not the stuff a business owner should be focusing on, true. But for at least the first year, you want to do this, because what it does is it teaches you the flows, how your money's flowing into your business and how money's flowing out of your business. So you could get a feel for that. So when Jenny's laying in bed, she doesn't have to think, did I check my sheets today? She has a feel for how the money's coming in and out. And here's the other super important reason, especially for that credit card section, why you want to do this. Because here's why: if you accept credit cards as a business that accept credit cards, people will spend more on credit cards. I forget the exact number, but like people will spend more money, and it's a significantly more amount of money if they're using a credit card and then if they're paying cash or if it's coming directly out of their bank account. And credit card companies, businesses that take credit cards aren't the only ones that apply this. Like you guys all have Dave & Buster's. I think it's nationally. Why doesn't Dave & Buster's just let you put your damn credit card in the machine, or put cash in the machine? No, they give you a card because if they could just add one step in between your cash and the goods you're getting, like they could get you to buy more stuff. I mean, it's a psychological principle. It plays on how our brains are wired that does that. Anything like, you ever play video games and it's like you have to buy tokens to buy stuff in the video game? It's because, and the tokens don't equal the dollars. It's because if they could put that step in between there, you will spend a lot more money on that game than you would have spent on if you were buying cash. So what we do, and if you have a wad of cash and throughout the week it goes to like from this much to this much, you're gonna be like, oh crap, I spent a lot of money, and you might want to rein that back. But if it's just a credit card, you're like charge, you don't get it. But if you're going back every day and writing it in there and you're seeing that total, how much money you spend on that credit card, and you're seeing this long list of stuff, it will break that. All right. So that's the reason we want to do that. So before we continue now, I think this is a good point to take a little bit of a break for any questions on anything that I discussed there.
Yeah, we haven't had any questions come in. I'm looking over on Facebook as well. I love your tip though on scheduling payments so that it works with your income flow. That's something we just recently did with our family budget, and it's like, why didn't we think of this sooner? It makes sense.
Yeah,
So
yeah,
it's a great tip.
So all right, okay, cool. Then we'll just continue. I just, if I lost anybody there, I wanted to be sure to catch them up. So
yeah, so you guys feel free. I'm watching the chats on both Facebook and for those of you in Zoom. So throw the questions out there. Jenny also loves that tip, she said. And we have Tara saying hi to you over on Facebook as well, Nev.
Oh, hey Tara. So yeah, so let's talk about our using the grace period on our credit card gives us. So we could pick our billing cycle for our credit card. And so in this situation, we picked the billing cycle to be between the 23rd and the October 23rd and the 23rd of November. So those 30 days, all the charges we make on our credit card will appear in those 30 days. But here's the great thing. Like that due date isn't until about December 15th. And we could pick our billing cycle and we pick our due date. We pay our credit card on the 23rd. So we go on and we pay because we know what the balance is because we've been tracking it. We go on, we pay that immediately. Okay. But we don't have to pay it to the 15th, but we always pay it on the 23rd, except in a situation like, let's go up to here. Now, so let's take this situation again. All right. You have recurring revenue of $4,800. Okay. So, and then you have a client paying, and you have plenty of money to make payroll and your credit card bills. And you always put your payroll before your credit card bill. So you always put any bill you have to pay before the credit card. So, because what happens if all of a sudden, like you lose like $2,000 of recurring revenue, this client doesn't pay or something like that, you could still make your payroll, but you won't be able to make your credit card bill. All right. If that money isn't due to the 15th, we've bought ourselves 2 weeks worth of wiggle room and flexibility. What I'm big on, to then come up with that money, to then look at the next, month and say, oh, okay, I see that at the beginning of December, it's going to be rough through the rest of October, but at the beginning of November, I'm going to have the money, to pay that credit card. So because I'll figure out why that person hasn't paid, or I'm getting more money in. So then, and there's no late fees. There's nobody not getting paid. There's nothing like that. All right. Gives you flexibility. The other reason why we use a credit card for all these little bills is, what if in the previous example, all those little bills you see on the right-hand side had come out before the 22nd, and now all that money is gone. Okay. So it comes time to making your payroll, and you can't even make your payroll because you've paid all that stuff on that credit card. You've already paid it. So now instead of having a couple weeks to make that credit card payment, now you're going to your team and being like, sorry, can't pay you. That's not going to engender team spirit, because you've paid off all these little things that you didn't even have to pay off. Yet you didn't think $56 to create a suite was going to make you not be able to pay your team. But these are the things that if you're managing cash flow, you want to talk about creating stress, have that conversation with your team, and, but this situation, it's a no-brainer. It's not even, it doesn't take more than it's not even a passing thought, because you're like, oh yeah, this is just how I fix that problem. Before, you're screwed. So we want to use our grace period here because when we need to, and only when we need to. So because we have that built in, because if we wait to the due date, it just becomes another bill we have to pay. So we pay it as soon as our cycle's done, and then we have it. So, and we've already talked about this. And so this is a little off topic of cash flow, but kind of is because we're talking about credit cards. But this is my, this is the 5-second thing that you can make that will solve you keep you from a world of hurt in the future, possibly. And it's the biggest mistake I see people making. It's you go up to the register, and we've all heard this question 1,000 times. Credit card or debit card? So, and credit or debit? and we're like, it doesn't matter, you know. And a lot of people just pick debit because they don't have a credit card. They're using a card that's tied right into their bank. And so it says credit card right here. Even if it says Visa right here and you pick credit, it still comes right out of your bank. They're just using the processing system to take the money out. But this could have massive ramifications. One, if you're doing debit, you could run yourself into problems like we showed you up before, okay? Because you could you could be taking that money out of your bank account immediately instead of when you want to take it out. But here's the big issue. So here's what happens. You're on this call listening to me drone on about money, okay? And somebody, though, is with your credit card down in Miami at the Fountain Blue, popping bottles, you know, having the time of their life, and you're on this call, and you get your statement, you're like, what? And your bank calls you, or you get your credit card statement, you're like, what the hell? I wasn't in Miami on that date, and what are you talking about, you know? And they're like, no, you bought this. And you're like, no. And they're like, okay, so it's fraudulent. Cool. Here's what your credit card does. Your credit card says, oh, cool, fraudulent charge. We got it. We'll take that charge off. You don't have to worry about it. We'll investigate it. And in a couple months, if we figured out it's fraud, you don't have to pay it. No worries. And if it is, it'll just go back on your account. And you're like, well, no, it wasn't me. So you're good. So the debit card, okay, the debit card, you call up your bank and they're like, oh man, I'm really sorry. That sucks. You know, we really feel bad about that. But you have all these bounce check fees because that person took $8,000 out of your account, and you know your payroll bounced, your vendor bounced, your contractors bounced, your rent, everything bounced. You know, because the money was taken directly out of your bank account, and you're like, oh okay, and they say, we'll look into it for you. Don't worry. And if you didn't do it, you're not responsible. And you're like, oh, thank you. They're like, but you know, your account's $3,000 overdrawn, and how are you gonna rectify that? And you're like, what are you talking about? I owe my people money and everything like that. All these checks bounce. I got to make them good. And they're like, well, you got to make us good too. And you know, you're going to be charged a fee every day that your account stays negative. So, and this just spirals down and down and down and down. Okay. Credit card, again, it's absolutely not a problem. You know, they take care of you. Bank, you know, they love your business, but they love making the fees off you that they're going to be making. So that's why credit cards key. So, but Nev, credit cards, they're evil, aren't they? We've heard this our whole life. They're evil. Yes, they can be. They have a very evil side to them. If not used right, they could ruin you financially. So use properly, and I'm going to give you the rules for using properly. I showed you how they could really protect you and buy you a lot more flexibility. Okay. So in the training you're going to get for free, we have, we go in to an alternative method. If you're just against credit cards or something like that, we give a whole alternative method that we teach to be able to do that. So no worries there. And then the rules of credit cards. So one, so if you don't have the money, you don't buy stuff. We are not financing stuff. This isn't a gift card. This is just spending money on stuff you would have spent cash on anyways. Okay, so no money, no buy. So second rule, do not carry a balance. We pay our balance off, we track our balance, and we pay our balance off every month. Okay, so it's very key. So third rule, always pay the balance in full. This is to avoid making interest payments. So no fees, no interest. Pretty much what you're using your credit card for is for the credit card company to give you between that flexibility to not have to group your bills and not have to pay them and not have to pay them immediately. Have some wiggle room if you need it. So those are the three main rules. And here's the fourth one. And this is more esoteric, but it's very important. Be responsible. Don't ruin your credit. Don't ruin your business. Don't ruin your life with credit. Okay. If you know you are not responsible with credit, do the alternative method. You know, be real with yourself. We all have limitations, so be responsible. I will tell you this. I have ADD. Like And I have to avoid like Facebook and social media, because I'll go on there for one little thing, and an hour later I'll be completely lost. Got nothing done, didn't even get the thing I went there done. And so it's my limitation. I cannot go on Facebook. It's a limitation on my life that, I have other people, if I get messages on Facebook, I get told about them, and then I reply to them. Because if I go on there, if I got to have all these notifications going off, it's over for Nev. So, so know your limitations and be responsible with this kind of stuff, and know if this isn't going to work for you, then do the alternative method. So, all right, one more time, no paying interest. So at all. So, I'll pound the table on that one. All right. So to get this whole thing, for this free full course that, and all the templates, you could take a picture of that with your phone and it'll take you right to the website, or you could go to that website address and get this course for free. This is not a sales funnel. This is the end of the sales funnel. Okay. So this is what we sell. So this is like the full course with all the templates and access to asking me questions about it that we're providing for free, only for 48 hours, because again, we sell this, and if this code is floating around there, we'll never make any money, and I'll never be able to do this kind of stuff for you guys. So it's only good for 48 hours to get the full course and the templates. So yeah, and then if you want to get a hold of, I should leave that up there, I guess. Yeah. So
Nev, if it's okay with you, it'll be only 24 hours at that point, but I can include this in the follow-up email for everyone who registered.
Yeah. And if we could find a way, we could maybe just give the templates or something like that too. But,
sure. Yeah.
Yeah. For people, but I'll have to see if that will work, because I'll have to talk to my course people. So
yeah, we can figure that out, but I'll include information on how everybody who's registered, how they can have access to this, however it works for you in the course.
Yeah, I mean this is the highlights of the course and exactly how we do it, but without the templates, it's hard to really build out, and without a lot of the we go a lot more in depth in how to use the stuff. So, anyways, now questions.
Yep, April Weir just said she got hers. Way to go, April. Let's see. A lot of people really resonated with the no more using a debit card. So that's good. Yeah, I loved your stories there as well. Not to say that I can relate with both of them, but the whole debit card spiral of debt and and also having your credit card stolen and used unsuspectedly. So that's always fun. But yeah, with the credit card, like you said, they just give it all back to you and not an issue at all. So that's awesome. We didn't have many questions come in. If anyone has them, here we go. So this is from Jenny. She says, I'm assuming Nev's answer is yes, but is allowing people to pay via credit card worth the fees?
I think it is, because, well, here's the best way to do it. There's something called an ACH. It stands for automatic clearinghouse. You don't have to know what that means because it's pointless. But it stands, it's an ACH debit, and it takes the money directly out of their bank account. So talk to your bank about it. Each bank has different policies. The fee is extremely low. If there's even some banks just charge a monthly fee, some charge a couple cents per transaction, everything like that. So, and that is the best way to do it, because it draws money directly out of their bank account, and then like they can't cancel their credit card, and their credit card number it can't expire. It can't. Second to that is credit cards, because it just provides because the money is going to be there. So it's just like you're giving up that 3% that you're paying to take credit cards just to know the money's going to be there. That's how we do things, just because it just seems like just easier that way. So yeah, I give
security
up the 3%
of it.
for the convenience. But ACH, if you could do that, and it's just a form they fill out where they give you their routing account or the routing and checking account number. And that's just the information that's on the bottom of the check if they're going to pay you in a check anyways. And then you just draw the money out of their bank account every month. So
perfect. Yeah, she says that we do that already via QuickBooks. So Looks like that. And then is that the same psychology as using a credit card, would you say? The ACH?
So if you're paying stuff with ACH,
I think that's the question, yeah.
I would say don't pay stuff with ACH.
Ah.
Get people to pay you with ACH, but don't pay stuff with ACH, because what you're doing with ACH is you're giving them access to take the money out of their bank account, and that when they want to, not when you want them to.
Yeah,
So,
that makes sense. Definitely.
And then we go into a whole thing in the course too about other reasons why, you know, credit cards are good, because like if you get all your vendors on credit cards, you can rack up a hell of a lot of miles. So like,
yeah, and you can use those points for other things. That's, yeah, for sure.
Yeah, save. I mean, I never pay.
So that 3% you're earning back somewhere else anywhere. And Ed Perry, he mentions that he thinks you can write off credit card processing fees on taxes. Do you know anything about that?
Yeah, that's an expense. Yeah. But you know, the thing about a write-off is, and write-offs are great, but like, write-offs is one thing that people are like, write-offs, everybody's writing off stuff. I don't know what I'm writing off. But here's the thing with a write-off. You're only writing off the percentage of your tax rate. So some people think when you write off stuff I'm not saying Ed thinks this, but because Ed seems to know what he's talking about. But some people think, if they don't understand what a write-off is, or they think if I'm writing off $100, I'm saving $100. When if you're writing off $100, you're only saving what your overall tax rate is. So if your tax rate's 20% and you write off 100, you're saving $20. You're getting $20 back, but it still costs you 80.
Okay.
So,
yeah, that makes sense.
That's a big thing. You get to deduct the 400 from your income, but you only pay like 20%. You know, you're only going to pay 20% in taxes on that, so you only get to save with the proportion.
That 20% of
it gets
it, yeah.
confusing, but
yeah,
so.
yeah, no, but that makes sense. Let's see. We did have a question earlier. Let's see. I'll get them all up here. April said, "What do you do if you get caught in a bad cycle, and what's your advice for how do you get ahead when you're behind?"
Could I get slightly more detail, like a more like theoretical type of example?
Let's see if she comes in with one. Not sure. While we wait on April to kind of give a theoretical, another question is, do you have a particular credit card that you recommend for businesses?
All right. So I like there's different cards give different perks, and you have to look where your spending is, and you could have the American Express Gold Business Card. If you're doing a lot of advertising spend, we'll give you 4 points back on all your advertising spend. We'll give you 4 points back in the categories you spend the most on. That's the American Express Gold Business Card. I have that one. I put my Facebook advertising on it and stuff like that. I put meals on it and stuff like that, because there's a $295 fee for that card, but I make up more than that because I use the travel miles, because an American Express miles are really good, and they're pretty much like, for every point you get, it's worth, for every point you get back, they're worth 2 when you're transferring to airlines and stuff like that. If you get maximum value out of it. So you're getting like pretty much 8% back on your spending to use on flights and stuff like that. My favorite card overall is the Chase Sapphire Reserve. Now that has a huge fee of $500. So, but you get a $300 travel credit. So if you're traveling, you get a $300 travel credit with that card. And then that makes the fee worth $200. And then if you want TSA pre-check, they give you free TSA pre-check. So, and then it gives you Priority Club. If you're doing a lot of traveling, it gives you Priority Club, Priority Pass, which gets you into these clubs at airports. So, and then, when I did a lot of traveling, like to Australian places, like if there's a Priority Pass club, go in there and eat for free. Nice. So I ate, and then there's 36 restaurants across the world that you could go and spend $36 a person and eat for. So when I went, and there's 3 of them in Australia. So I went to Australia. Like when I was flying all over Australia and here, like I ate like hundreds of dollars worth of food for
For
free, and
36
then all these
bucks or for
clothes.
free? Ah, for free.
Yeah.
Oh, wow. That's amazing.
And that one you get 3% back on travel, you get 3% on restaurants. If you go out, but there's also this Chase Sapphire Preferred that is a $95 annual fee. You don't get some of those benefits, but there's a website called The Points Guy,
Mhm.
and he has a lot of good information on what credit card, how to use your points. Chase Business Inc. Cashback is the one we used for ages before I was traveling. We used that card for ages. It's great. It was my favorite card for ages. We don't use it now because we can make more benefits off the travel perks. But yeah, so Chase Business Inc. Cash.
Nice.
So,
Great
yeah.
stuff. Great stuff there. April did follow up. She said, so what do you do if you get caught in a bad cycle? How do you get ahead when you get behind? Like if you have a financial crisis and get way in debt, whether that's due to health or family or whatever, it happens to everyone. But if you don't have an emergency fund, or maybe your fund gets depleted, it can be hard to recover when you get stuck in those sorts of situations.
Yes. So that would you would need to look at your budget and pull through. Like we have a form, and it's a free form that we give away. If you sign up for something at our website, you'll end up getting the second email we give you will give you our monthly money finder, we call it, and it's just pretty much you audit your expenses, your subscriptions and your expenses every month, and then you could pick the ones. There's almost even us. I mean, I'm really good at this stuff, but we do this every year, and shit slips in every year on us. So we cut back stuff every year after looking at it, and it really walks you through a process of not just listing stuff and looking at it, but writing down like what everything is for, and writing down like what and thinking about it compared to the other stuff on your list, and saying, can this replace this? I mean, because you always have that app Sumo, or you always have this new program that you want to try, or this, and it's like, well, like with GoWP, you might already have a GoWP subscription, and GoWP could do so much more for you, but you're using another service, you're using another software, you're using this, or maybe you're already paying GoWP and you don't need that, designer or something like that, or that other developer, so it makes you think of those things, and then you could save $100 to we always save a couple $100 when we go through this a month, and that's a month. So that's, and take that money and put it somewhere. Other things are looking at your budget, looking at the money you take for the business from yourself, and maybe even going into the personal side and saying, on the personal side of stuff, and saying that you're going to cut back on this kind of stuff, like maybe you like you like nice wine or something like that, and you're going to cut back on your wine consumption for the next 6 months to get yourself out of it, or something like that. Those kind of things, or consolidate high rate credit cards, all those kind of things. It all don't wrap stuff into your mortgage. It's normally a bad idea. So
yeah, I think those are all good tips. I'd say, April, if you have more questions on that, feel free to jump in there.
Yeah, or follow up with me, April.
Or follow up with Nev. Yeah, and everybody who's watching, Nev is a member of the GoWP Niche Agency Owners Facebook group. So he'll be in there if you need to follow up with him there, or obviously through his website there. He's got his email up on the screen. One other question from Ashton. Do you have experience with FreshBooks and QuickBooks? And do you have a preference for one or the other for a small agency?
So I think any version you use, whether Xero, FreshBooks, QuickBooks, anything, any accounting software you use, like you have a bookkeeper giving you reports, they all pretty much do the same thing. They have some specific, there's not one that's better, that's clearly better than the other. Look at the pricing, look at the features, and see which one you want to go with. QuickBooks, look at any integrations you want to do. QuickBooks normally integrates with more stuff just because it's more of the 800-pound grill in it. I've looked at FreshBooks. We use QuickBooks. I've looked at FreshBooks. I really think it's cool. They seem to be targeting a small agency. So I think it's definitely worth. You won't go wrong picking FreshBooks. Let me put it that way.
Cool. Good. That's helpful. And then I think the last question we have here so far, anyway, if anyone has other ones, throw them out. But would you recommend, this kind of goes back to what you were saying earlier, would you recommend auditing subscriptions and expenses quarterly, yearly? How would you go about that?
Well, here's the thing. The first thing you'll get the first form you'll get is, I would say you could do it like every 6 months or every year if you want. But here is the thing. What we want to do is stop what I call subscription bloat and all those kind of things. And employee bloat, subscription bloat, software bloat, overspending on stuff. I have a form. It's called Shiny Object versus Needed Tool. And again, this is free because we put all this content out there for free because we really want to help people. And then you get this form. And then when you want to buy something, you fill out this form. And then it will stop you most of the time from buying something that you're going to end up having to cut off, because it pretty much walks you through a drill. Because here's the thing, like, without getting too much into this, but this is something that I'm passionate about, is like we buy emotionally and we justify rationally. So most of our purchases are done with the emotional part of our brain. Okay, this is proven psychologists, and that's why persuasive sales copy works, because you're not selling people with the facts of your product. You're selling them with the after state they could achieve from buying your product. That's why good sales copy works, because it's playing on the emotional side, not the logical part of your brain. It's engaging that. So what this form does is it walks you through it breaks that emotional part of your brain and engages the logical part, so that you don't have to do. If you don't do something like that, hell, do it quarterly. But you'll get lazy. I get lazy, and I don't use the form all the time. So, and then that's why every 6 months to a year, you have to do the audit, because then you're like, but if you use the form, every decision you make, every hiring decision, every purchasing decision, period, you will never have to do an audit. But, we're humans, and, we like to hit that pretty buy button.
Indeed, especially when there's a sale.
Yeah, exactly. So
Mateo asked,
I'm a sucker.
Yeah. Mateo asked about Bonsai. Do you have any insights on Bonsai?
On what?
Bonsai. I think it's another like bookkeeping tool, maybe.
That is one that is new to me.
All right.
So.
I think that's what it is. I'm assuming, because I think he asked that while we were talking about that. Mateo, if you want to clarify that at all, feel free. And then one other question that I passed up earlier and forgot about. Do you recommend weekly or monthly for big or small purchases? Do you have kind of a system on that? Or is it important?
So to clarify the question, weekly or monthly, small or big purchases, I'm not sure. So I understand the question.
Let's see if I can figure that one out. So I think what they're asking is, like, would you, yeah, I'm not quite sure either. If Kaylin, if you want to clarify a little bit more there. I'm not sure if that's maybe a subscription question again. I don't know. So let's see if they come in. But otherwise, this has been a great Q&A, guys. Thank you, everybody, for throwing these questions in.
Yeah, and if you have questions about pricing or anything like that, I mean, I do a lot of stuff on pricing, all that kind of stuff. So put them in the group, or ask them now. I mean, I have a whole ton of stuff on pricing and everything like that. So yeah, anything finance I can answer. I just was teaching one thing.
Very good. Well, I don't see them jumping back in.
All right.
So, and we're running out of time here. So I guess we can go ahead and wrap up. Yep. Thanks for coming. Kaylin says she's all good. So no worries there. Thanks for coming in. He said he's got to run. So yeah, wait, we got one more question over here. Sorry guys, I've got screens everywhere. No, just another thank you. So another thank you from Kevin. This has been really valuable, they said. So yeah, do you have anything more to add, Nev, or?
No, that's it. So, yeah. All right.
Fantastic. All right. Well, thank you everybody for coming. Again, if you're watching this on the Zoom webinar, please join us over in the Niche Agency Owners Facebook group. We do a lot of great stuff there, and you can catch all of these recordings and easily engage with our webinar panelists because they're in the group too. So you can tag them over there and ask them your questions. And obviously go check out Ned's course and his site, nevharris.com. He's got a lot of valuable stuff over there for free too. So that's amazing.
We don't have anything we're pretty much selling except that cash flow course right now.
There you go. And you guys get that free for the next 48 hours.
Yeah, it's everything on the everything.
It's a free for all.
So,
all right. So thank you everybody for coming. Thank you, Nev, for doing this for us. We really appreciate it. And we'll see you all at the next webinar. So thanks, Nev. Talk to you later.
Sure. Thanks.
Right.
Bye.
Bye.